Do you remember how good it was back in 2022 when interest rates were at 2%? Those were the golden days. I believe this was once in a lifetime opportunity to build some serious wealth. Buying a property was easy at the time, and many now have a distorted view of property investing. Serious property investing is uncomfortable. It's not hard, it's just uncomfortable. And coming to terms with your emotions becomes easier once you have knowledge of the different strategies out there, the different finance solutions in the marketplace, and the different markets in our country. I recently started reading a book called The Tax Secrets of the Rich. A few paragraphs in this book blew my mind, and especially when I learned about the possibility of the ATO bringing in higher taxes. I felt compelled to share the amazing information that I came across on how the rich are protecting their future. In this video, I want to share with you how you can do the same thing. If you want to buy this book, you can find a link in the description below. Welcome to another episode of Roy Talks Property. This video will discuss finance and tax. So let's get some housekeeping out of the way. This video is not financial advice. It does not take into consideration your personal financial position and cannot be interpreted as financial advice. The numbers in this presentation are a guide only and should be considered as such. The first thing I learned from reading The Tax Secrets of the Rich is that the ATO is broke. If we bring together the ATO collections and the government spending, we can clearly see that collections are at 452 billion and the actual expenditure for 2021 was 659 billion. That's a shortfall of $207 billion. For 2022, the ATO expects the collections to be 482 billion and they plan to spend 589 billion. That's a deficit of $107 billion projected for that year. These deficits will continue to add up and will result in a net debt of $1.2 trillion by 2025. The population of Australia is currently running at around 26 million people, of which 14.2 million are registered taxpayers. 26 million of us, 14.2 million work. So roughly around 55% of the population are registered taxpayers. The balance is more likely to be children, non-working partners, social welfare recipients, retirees, and so forth. And for the year of 2022, it's estimated that there will be a net debt of 729 billion. That is 35% of our GDP. So at a large scale or at a macro level, the government's debt is estimated to skyrocket to that $1.2 trillion that we spoke about by 2025, and the government's going to have a major challenge of how to pay it off. So how will the government cover $1.2 trillion in debt, given that the revenue averages around 480 billion and we usually spend 600 billion? Here's the bad news. For you, me, and 30% of the income producing population that earn a little bit more money and pay higher taxes, we are going to be forced to shoulder this burden for many years to come, unfortunately. So the rich or the wealthy will be paying very close attention to where their taxation dollar goes to and what the government will be doing in 2022, 2023 and beyond to reduce their deficits and to reduce their debt. Post-COVID-19, the governments will be tasked to spend the money that they receive in tax revenue wisely, and they have to balance their budget and get out of debt. COVID times forced many governments around the world and central banks to print more money and take on more debt to support the economy. However, it is time to repay the debt that is upon us. Generally, governments repay debts in three ways. So the first way is raising taxes. So this means new taxes, increases in the current tax thresholds, or reductions in concessions. The ATO is expected to increase its revenue by 30% over the next 2 to 3 years, from 480 billion to 625 billion dollars. The second way is reduce spending in real times, meaning they adjust to inflation. Governments will lose elections if they try to reduce spending because the people are not going to be happy about that. But what they do is they hold their spending at the current level and they allow inflation to reduce their spending in real terms, which will be less noticeable to the voters and the public. Third, governments can print more money to increase the money supply. However, this will increase inflation and reduce the value of money. So people who are on fixed incomes or government support will struggle because the dollar will buy less. Printing more money is easier for governments than reducing pensions or social welfare. So instead, they will just erode the value of your money to achieve the same effect. So how is our government, the Aussie government, get out of $1 trillion of debt when in a good year we get 10 to 20 billion surplus? So to even make a dent in this debt, the surplus needs to be more than 100 billion. Remember, we are already spending $500 billion. It's just inconceivable how Australia will ever achieve a surplus sufficient to repay its debt. In 2022-2023, the government and its federal budget announced an additional $652.6 million to be provided to the ATO Tax Avoidance Task Force. This is meant to increase for the next couple of years until 2025, and it's expected to raise an extra $2.1 billion. So this is the first measure or step of increasing or raising taxes that we spoke about earlier in this video. Unfortunately, it will get worse. For taxpayers or employees planning for their own retirement, it's going to become more difficult because an employee tax is taken first under the PAYG system, pay as you go, and they are left with the balance to work with and survive off. So over the next 10 years or so, as Australia begins to repay its debt, being proactive and on the top of your numbers becomes more and more important. Otherwise, you might end up being the 95% who require financial assistance in their old age. But if financial assistance is not sufficient today, you can expect that it won't be sufficient in the future either. So you have to take control over your future and your wealth. The rich are using incentives and tax offset that are within our tax system to the fullest in order to minimize the tax payable moving forward. And this applies both at a business level and personal level. If you are an employee, save as much as possible to begin investing in assets that will grow in value, such as real estate. Now that the ATO is broke, you have to be proactive in order to stay ahead of the system, to stay ahead of majority of the people who are unfortunately stuck in the rat race. I know that this video painted a dire picture of our country's situation, but I hope it gives you the drive and the determination to build yourself a better future, because now we both know that our government is falling short. Thank you so much for watching. I hope you enjoyed this video, and I'll talk to you again soon.